Yes, it is, but then you switched to period cost, and you were putting it on the credit side of the manufacturing overhead T account. I didn't like that very much. I want it on the debit side of the manufacturing overhead T account. How much? $60,000. Because we need to know, what is the other side of that journal entry? This is depreciation expense. What's the other side of that journal entry? A credit to what? No. Not a credit to the income statement. What is the credit to? Seth? Do you know? This is kind of above and beyond the call of duty. And so you need to remember it from your last class. That's where you need to remember this from. If you debit depreciation expense, you would typically credit. Anybody remember? Accumulated depreciation. Okay. Okay, so that's the debit, that's the credit. Okay. Whew. Yeah. You're remembering at least some of the stuff you learned last accounting class. Oh, Rabina, you're next. What's the next number?
Depreciation on the sales office.
Okay.
That'll go in manufacturing overhead debit.
Ooh. What's it depreciation on?
Sales office.
Do salespeople make things? No. Where does that go? Yes. And now I'm going to leave room for a number there, and then I'm going to include Rabina's number. And what is your number?
It was $4,000.
$4,000. Okay. And so why is it going on the income statement and not into manufacturing overhead?
Because I feel they're not manufacturing.
Yes. It's a period cost. It's not a product cost. It is a period cost. And all period costs we put straight on the income statement. Wahoo! Tony, you're next. He is excited.
Depreciation on administration, administrative office.
How much?
$3,000.
$3,000. He had the benefit of my explanation to Robina, so he did a very good job with that. Brittany, you're next. The problem with Tyler knows he's next. So he always gets, like, advanced notice because he knows who comes immediately before him. Brittany?
Sales salary is $120,000.
And where's that go?
Income statement.
How much? $120,000? Awesome. Tyler?
Sales revenue.
This is the one Tyson wanted to do, isn't it?
Going to go in the income statement for $3,335,000.
Credit, $3,325,000. $335,000. $3,335,000. It took him a while, but he finally, kind of spit it all out. Whew. Kylie, you're next. Do you know that you follow Tyler?
Yes.
So I might have to start, I've shuffled these before. That makes it more fun. Or I'll start going through them backwards, and then maybe later in the semester I'll shuffle them.
Assembly line labor costs.
Okay, assembly line labor costs, where do those go?
Direct labor.
Yes! How much?
$820,000.
$820,000. Kristen, what would be the other side of that journal entry? I don't know, I seem to be in a journal entry kind of a mood today. Do you know? You laughed when
No, I was laughing at that you feel like
I'm a journal entry, it's a journal entry kind of day?
Yeah.
That'd make a good advertisement. I'm not sure for what, but it'd make a good journal entry. It's a journal entry kind of day. Kristen, have you been able to use this time constructively? No? Brett, do you know? What would be the other side of this journal entry? We're debiting direct labor expense for $820,000. What would the credit be to? There's at least there's 2 to 3 possible correct answers.
on the direct labor credit side?
No, you can't debit and credit the same T account. So what's the other side of this journal entry? We're debiting direct labor. What are we crediting?
I'm not sure.
Anybody know? No, not work in process. What did you say? Salaries payable, wages payable. Somebody else said cash. Some sort of asset account. Actually, wages payable and salaries payable are not an asset. They're liabilities. So either wages payable, salaries payable, or cash. Any of those would be correct. What, Tyson? You are shaking your head.
I'm just debating this.
What are you debating? Who are you debating with?
Myself internally.
Okay. And who's winning?
Not me.
Will, you're next. Another note. What's the next number? 12,000. Factory security guard cost. Where does that go? Which T account? It is not direct labor because security guards don't make tables, right? So, not the income statement either. Because is it a product cost? Is it a cost associated with making the product? Yes. Why? Because what are those factory guards guarding? The factory. The factory guards are guarding the factory. Therefore, it is a cost of production. Therefore, they're not direct labor. They're not direct materials. So therefore, they must be what? The only T, No, they're not direct materials. They're not direct labor, so they must be manufacturing overhead. Absolutely correct. How much? Very good. Oof. Nicole, you're next. Oh, I'm sorry. What's your question?
I have a question. When we had talked about janitors, like, aren't they considered direct labor?
They are not.
They're manufacturing overhead?
They're indirect labor.
Okay.
And they are manufacturing overhead.
Okay, that's what I was confused.
We use the word, we describe them as indirect labor, and therefore manufacturing overhead. And actually, these security guards, we could use the same word. They're indirect labor, but not direct labor, okay? I'm sorry, Nicole.
Factory supervision,
Factory supervision.
manufacturing overhead?
Yes, because where are they at? The factory, and they're not direct materials, and they're not direct labor. Therefore, they must be manufacturing overhead of how much? $82,600. Okay.